Hey gamers, I've been thinking about a bunch of movies that are coming out based off classic video games, so I've called in my usual squad to do some replays of them. Hey Pablo.
Hey bro.
Jen, you there?
Hi everyone!
You know what's great about these games is that they all deal with credit losses.
How is that great?
Because the FASB finally got rid of the old incurred loss methodology.
Man, that was so bad because you had to delay the recognition of the loss until it was probable that a loss had been incurred.
Now that was intelligent. The practitioners knew they needed to write down an asset, but they weren't allowed to because of threshold under GAAP.
So dumb.
Oh, hey Cookie, thanks for joining. Let's get this going. Pablo, you're up, my man.
Alright, so I'm loading up the original unmapped Blake's credit losses.
Hey, let's talk about the new method. What's it called again?
CECL.
Oh, that's right. CECL. Accounting geeks and their acronyms. What's it stand for anyway?
Current expected credit losses.
Makes sense, so it's going to actually reflect the expected credit losses.
That's cool, but it's going to have to consider a much broader range of information.
That's the idea.
Alright, so I'm starting where Blake and Scully talk about the amount that has to be presented on the balance sheet.
It's about time you got here. The users of the financial statements are gonna kill me if I don't give them better information.
Well, what do you expect waiting until a loss has actually occurred to say there's a loss? What good is that to anyone?
Well, what would you do, Mr. Know-It-All?
I'd present the asset at the amount expected to be collected. Let's get going.
Yo, Pablo, the cutscene's over. Move your character, dude.
Hey man, it's been forever since I played this.
The jungle is thick, kind of like all this data I have to go through.
You're taking the tough route. All you really need to do is deduct an allowance from the amortized cost.
You're right, Scully. If I deduct an allowance for credit losses from the amortized cost, that will give me the net carrying amount.
And that would be the amount expected to be collected.
It won't let me climb it.
It's the B button. It's the B button.
I can't get it to work, man.
Oh, this is boring. Can you skip to chapter 8? That's the iconic one.
Oh man, I love this part. Now that you've set up an allowance, you have to make the offsetting entry.
To what?
It has to go into the income statement as a current credit loss.
Hit A, Pablo.
Oh, what? Come on.
Sorry, dude. You're trash at this one. We're moving on.
Can we get an F in the chat for our dearly departed Pablo?
Okay, Jen, what do you have for us?
I'm going back to the first Speedy game. He's so cute.
I remember being confused as a kid because there were so many different ways to get through the level.
Yeah, it wasn't super clear what you were supposed to do.
Kind of like CECL, because it doesn't require any specific method.
You had to be careful to make good choices because various methods could be used. It looks like it loaded.
Wish me luck. Okay, so first, I think I'll look to the past and use a loss rate. There he is! OMG! I told you he was cute.
You're coming up on an aging schedule. Let's see how Jen does.
You're going to want to use a roller rate here. Careful not to lose your rings.
I'm going to take this back and look at vintage analysis.
Look at the years of origination. Whoa, sick move.
See if you can get those discounted cash flows.
You're gonna run into the probability of default or loss. Watch out!
Darn it! That's so annoying. At least I'm getting to the next part.
I always thought this part was easy because you had collateral to work with, but she has to battle Dr. Ego Man.
You're right. When there's collateral and foreclosure is probable, you can use that number.
So you can value the expected loss using the fair value of the collateral?
Yep, regardless of how you did your initial measurement.
Oh wow, so the credit loss will not be delayed until the actual foreclosure.
Here we go. Big showdown, and this is when I show them who's boss. Take that, and that, And that.
You're so close. You almost have him beat.
I know you're down there. I'm not gonna ask you again, young man. Take out the trash now, Chris.
Okay, Mom, I'll be there in a minute. Sorry, guys.
Don't tell me you missed my win. Oh well, it's your turn now anyway, Chris.
What are you gonna play, man?
My all-time favorite, Super Mario Partners.
Showing your age a bit, aren't you?
So what? This game was always so much fun because it was so fantastical.
Kind of like off-balance sheet exposures. Like, who came up with that weird idea?
Well, the accounting gets even more fantastical because now you'll book a liability for the expected amount of loss and run the loss through net income.
So the off-balance sheet goes on the board.
Hey man, pick up that PCI.
A what?
Purchase, credit, impaired, asset.
Chris, you sound like my dad. The new term is PCD.
Oh yeah, purchase credit deteriorated asset.
Yeah, whatever. It's all bad paper.
Oh, now drink the coffee so you can get the credit allowance.
I forgot about that. Thanks.
Effortless, bro.
What are you gonna do next?
Now I have to save partner Peach.
I hope you're planning on calculating the allowance for credit losses while you're at it.
Yeah, of course. I have to follow the CECL.
Go for it, bro. It's rescue time.
Okay, so you have your allowance.
I know.
Now you have to add that to your purchase price to come up with an initial amortized cost. You're almost done.
What? But that's not what I paid for.
It doesn't matter. You got this.
Don't make me come down there, young man. You get up here this instant and take out the trash now. And then there are a few more things you're gonna do for me.
All right. I'm coming. Sorry, guys.
What do we do now?
It's his stream. How should I know? I'm out of here.
Now what? Hey, anyone in the chat seen any good movies lately or read any good books? Anyway, don't forget to click and subscribe to my channel.